the Canada Central Bank may actually be looking in towards a rate cut that may precipitate a little bit more of buyer activity and start pushing things more and more to a seller's market average for the composite index in the city of Toronto. We are looking just under 1.1 million at 1093 as an average. W04 encapsulates Weston, which we talk about a lot. The average price of a house there is $929,000. So we are talking about $165,000 savings over the overall average in the city of Toronto. Hey there, people. This is Joshua Jean-Baptiste, Toronto real estate broker, and we're going to dive into the city of Toronto real estate stats, and then we're going to dive right into some of the under-the-radar statistics that we like to follow, and then also look into some of the under-the-radar neighborhoods. And there's going to be a very similar theme to our past market updates. There's a couple of neighborhoods that keep bucking the trends here in Toronto that many people out there have got to keep an eye on. There's an old adage in real estate that you make money on the buy and not on the sell, and a lot of these under-the-radar neighborhoods is where you want to be looking. Let's get into the market stats. So I'm going to pull them up right here. You're going to see them right here on the screen. So I'll quickly go over some of the general Toronto stats, some of the stuff that you've likely seen reported, just to kind of give us some context as we get into some of the under-the-radar stats and the under-the-radar neighborhoods, so we understand how everything kind of fits together in this puzzle. So let's jump into the year-over-year stats. So sales are down 4.5% over last year. It's been that trend for a while. No surprise there. New listings are up 15%. Active listings are up 23%. Very interesting stats to keep an eye on, and we're going to get to that in a moment when we go and talk about some of the under-the-radar statistics. Average price up 1.3% over last year, so relatively flat. I mean, pricing is starting to trickle upwards again. And then our average days on market is slightly higher than it was last year. Now I should put into context that all of these stats were from last month, from March 2023. It is now April. We are looking at what happened last month in the city of Toronto. So now when we look at the city of Toronto specifics when it comes to pricing, so we'll look at detached houses were relatively flat at 0.4% up over last year. Semi-detached houses are pushing upwards. They were up 3% over last year. Townhouses almost up 3% as well. And condos were down at half point, so relatively flat. And that's for pricing specifically here in the 416. So all of those stats now should give us context as we move forward into some of the under-the-radar stats that we like to track on this channel. So for those of you who haven't followed this channel for a while or are just watching it for the first time, the two under-the-radar stats that we like to track that give us an idea of temperature in the market and give us some predictions on where things are likely going when it comes to pricing and sales in the city of Toronto. It also gives us an idea on where things are at right now, so the temperature of where we're going and where we're at. So those two stats, the first one is months of inventory. The acronym for that is MOI. And then the other stat is sales to new listings ratio, which the acronym for that is SNLR. So for the first one, for months of inventory, that stat just effectively captures what would happen if there were no new listings to hit the market from this point forward, how long it would take to sell off all of the inventory in the city of Toronto. And then when we look at sales to new listings ratio, this is the percentage of new listings that would sell in a given period of time. So to give you an idea of a balanced market for sales to new listings ratio, you're looking at about 50%. So 50% of all new listings that hit the market would sell within a given period of time. To give you an idea of like when the market was really hot, so what we saw in 2021 and 2022, sales to new listings ratio was well in excess of 70%. So over 70% of new listings that were hitting the market were selling almost right away. When we looked at when the market had slowed down last year and back in 2023, we saw sales to new listings ratio in some neighborhoods down to the 40%. So only 40% of new listings that were hitting the market were selling. So it kind of gives you an idea. 50% is kind of that baseline. Anything above that is hot, anything below that is slow, so what we would call a buyer's market. So let's look at these numbers. Months of inventory. So for in the city of Toronto, we are sitting at about 2.8 months of inventory. So again, to give you an idea in terms of balance, months of inventory balance market is at about 2.5. So when we look at the overall stats in the entire GTA, we are in a balanced market. So we're not in a buyer's market or a seller's market when we look specifically just at months of inventory. For the city of Toronto, we are slightly elevated at 2.8 months of inventory. However, when we look at the different areas and neighborhoods in the city of Toronto, you're going to quickly see, so if we look at the Toronto Central numbers, sitting at about 3.4 months of inventory, those Central Toronto numbers are pulling the overall average higher. And a lot of that is due to the condo inventory. So condo inventory is still quite high in the city of Toronto, so it is pushing that months of inventory trend number up a little bit. If we were to remove condos, or if we look at some of the neighborhoods across the city of Toronto, so if we look in the West End and we look in the East End, you'll see there's a lot of neighborhoods that are trending well below that 2.5 months of inventory. And these are neighborhoods that don't have as much condo inventory. So we're seeing that when you're looking at freehold property in the city of Toronto, so that means houses, that means detached houses, semi-detached houses, townhouses, the months of inventory is quite tight. So when we look at freehold housing in the city of Toronto, we are trending towards a seller's market. I mean, in most neighborhoods we're in a seller's market. However, when we look at condos are still very much in a buyer's market. If you watch some of our content from last month, I was screaming into the camera that we have a massive opportunity in the condo market. That opportunity still exists. There's still a lot of inventory and pricing is still a little depressed. So if you're looking for a condo, there's still an opportunity to get a condo at a slightly depressed price. And not only that, not a lot of competition. There's not a lot of competition in the condo market based on the amount of inventory we have. So if we look at I'm going to pick on one neighborhood. If we look at CO2, which is one of these central neighborhoods, we're sitting at 4.1 months of inventory. That's largely due to the condo product. So it would take 4 months for all of that condo product to sell off. Another neighborhood that's dominant in condos is CO8, 4.3 months of inventory, and then C12 at 6 months of inventory. So those three neighborhoods are well stocked with condo product, and there's a lot on offer. So if you're looking in those neighborhoods, no competition, very much a buyer's market, you can likely negotiate price on a lot of the product that's listed in those neighborhoods. Now, if we were to look at some of the under the radar neighborhoods specifically, so if we look at W03, W04, and then we look at CO3, so for W03 sitting at 2.2 months of inventory, so trending towards a buyer's market. W04 is right in line with the overall Toronto average. W04, that's a little elevated because there is a lot of condo product in W04. W04 encapsulates Weston, which is what we talk about a lot on this channel. And there's a lot of new condo product in Weston. And as we all know, as I said, condo product hasn't caught up to freehold just yet. So it's pushing that number a little higher. And then same goes for CO3, sitting at 3.3 months of inventory. That's largely due to some of the condo product in that neighborhood that's pushing the months of inventory a little higher. Now, when we look at, before we jump into sales to new listings ratio, we look out on the East End. East End is fully in a buyer's market. Their months of inventory as an average in the East End is 1.8. And I can tell you from experience, almost everything in the East End that gets listed for sale is getting snapped up quite quickly. And there's a lot of competition for homes in the East End of Toronto. Now, when we look at sales to new listings ratio, this stat gives you an idea of the kind of temperature of the market, right? So when a new listing hits the market, how quickly is it going to sell? Is it going to get snapped up right away? Or it's going to move, or is it going to take a lot longer to move? So when we look at the sales to new listings ratio for the overall city of Toronto, we are sitting at about 44%. So as I said in the intro to this segment, 50% is kind of a balanced market. At 44%, That means we are still in a buyer's market overall. However, we are trending upwards when it comes to sales to new listings ratio. And then when we look at break down some of the neighborhoods, we look at the Toronto West neighborhood, we are just over 46%. In the East End, we are at 51% sales to new listings ratio. So as months of inventory already indicated, the East End is very much in a seller's market territory and keeps trending further and further deeper into that seller's market. Central Toronto, we're at just under 40%, 39.7% for sales to new listings ratio. Clearly, condo product isn't selling at the same rate as houses, and based on this statistic, it proves to be true, where only 40% of new listings that are hitting the market are selling, and that number is likely even lower if we were to back out a lot of the freehold product in these neighborhoods. Now this is just me purely speculating because I haven't actually run the calculation. Let me know down in the comments if you'd like me to break down that calculation. I could probably dig it up. But if I were to just kind of throw out a number, it's probably down in the low 30s of sales to new listings ratio if we were to back out freehold houses from that stat. So overall, when we look at these under the radar stats, it really just shows that while pricing is moving upwards in the city of Toronto, and if you talk to a lot of real estate agents, you'll say, hey, the market feels like it's heating up. It is. However, it doesn't necessarily mean that every single property that's hitting the market is getting a ton of interest and a lot of offers. Certainly that is happening in the cases of nice properties, especially on the freehold side. Freehold homes that look really well in really trendy neighborhoods that are priced well are getting a lot of attention. Condos and properties that may not necessarily be the bells of the ball aren't necessarily moving quickly and are taking a little bit longer to sell, which is showing that overall, when we take all these stats together, we put them together, we are likely in just a balanced market still right now, but we are trending towards seller's market. The East End is clearly already there, and the other neighborhoods in Toronto are playing catch up. And the condo market, while still very much in a buyer's market territory, is also starting to trend towards that seller's market. And then with the winds of change happening, i.e. the central bank rate announcement, there's a few articles floating out there that said that the Canada Central Bank may actually be looking in towards a rate cut before the U.S. Federal Central Bank has their rate cut. So that may precipitate a little bit more of buyer activity and start pushing things more and more to a seller's market if that were to happen in the near future. So now let's spin off and let's go to the under the radar neighborhoods in Toronto and analyze and just talk about why I keep talking about these specific neighborhoods and why I think there is a lot of value in these neighborhoods. Especially when we look at the numbers, just straight up sales numbers and the overall price in some of these neighborhoods. So for the under the radar neighborhoods, as if you followed this podcast, you follow this channel, we like to look at the home price index for pricing because it's a bit more of a smoothed out version of the stats instead of using just average price. So I find with the HPI index, you get a more accurate picture of what the actual values are in the neighborhoods that we are going to be discussing in a minute. So first off, just to give you an idea of the difference between the average price and the HPI. Average price in the city of Toronto, earlier when we had it on screen, it was just over 1.1 million for average price. The average, I think it was exactly 1.121. For HPI, because it's a bit more smooth out average price, we are looking in the city of Toronto at just under 1.1 million at 1093 as an average for the composite index in the city of Toronto. Now we look at some of the under the radar neighborhoods, so W03, W04, and C03. W03, the average price on the composite index, is just over $1 million at $1,008,600, which represents about a $90,000 savings over the overall average in the city of Toronto. And then when we look at WO4, the average price of a house there is $929,000, which represents a massive discount over the overall average in the city of Toronto. So we are talking, about $165,000 savings over the overall average in the city of Toronto. I actually had some buyers looking in WO4 just recently, just secured a house, and they looked out there because based on everything we were seeing in the city, we were looking at the East End, we were looking at some other the trendier neighborhoods, and they weren't able to necessarily find what they wanted for sub $1 million in the city of Toronto. We looked out West End, we found a 90s built townhouse, amazing shape, pretty much move-in condition for just under $900,000. So there's certainly some opportunities if you know where to look. And then when we look at CO3, the average is 1.7 million. But again, if you follow this channel, you know how we talk about the neighborhood of CO3, which is the neighborhoods boxed in by Eglinton to the north. You have Dufferin on the west. Let's say about Avenue Road or Yonge Street in the east, and St. Clair in the south. So this kind of pocket of central Toronto. And this pocket is surrounded by some of the priciest neighborhoods in the city of Toronto, actually the priciest neighborhoods in Canada. So just north of there, you have Lawrence Park and Forest Hill. Just to the south, you have Wychwood. So while 1.7 million is quite a big number above the overall average in the city of Toronto, the one thing to remember is that this neighborhood is predominantly dominated by detached and semi-detached houses. There aren't a ton of condos in the neighborhood. And then if we were to compare it to the neighborhood just to the north of it, where the average is 2.2 million, you're looking at $500,000 savings over the neighborhood literally a couple hundred meters north of it. So that's why, again, I call it an under the radar neighborhood, and it's under the radar for more the luxury buyers out there. So if you're looking for that higher end of the market, you're finding homes that are selling for under $2 million, where if you were to look just north of Eglinton into Lawrence Park and Forest Hill, this exact same home that would sell for, let's say, 1.9 million in CO3, when you get into CO4, for example, that exact same home is now all of a sudden 2.6 million. And you're getting a lot of the same neighborhood amenities in this neighborhood that you would in a Forest Hill and a Lawrence Park. And you're even getting into some similar school districts in terms of the demographics of these schools. So certainly an under the radar neighborhood worth keeping an eye on. And then when we look at the year-over-year change in some of these neighborhoods versus the city of Toronto. So in the city of Toronto, numbers were relatively flat. They were down 0.31% year over year. However, when we look at WO3, the year-over-year average was up 3%. And then we look at WO4, they were up only 0.22%, but that still represents about a 0.5% variance over the overall average in the city of Toronto. And then we look at CO3, this neighborhood, month after month, and I sit here on this podcast and I keep talking about it and I keep telling people, I only have a few hundred people that watch this podcast. I'd like to have a lot more. If you watch this podcast, please share it with your friends and family, because every month I sit here and I say, CO3 is the place you want to be investing your money in, because even during the depths of last year's market and into this year, CO3 keeps being that one neighborhood that continues to show year-over-year growth. So every month I'm looking at the numbers from CO3. So right now we're up 7% over last year. And that was last year when I kept showing CO3 as being an outlier. CO3 was always beating every other neighborhood in the city of Toronto, and it continues to beat every neighborhood in the city of Toronto in terms of price growth. You go up and down this list, even some of the neighborhoods in the East End that are very tight in terms of inventory, CO3 is still beating them. So if you had bought a house in CO3 last year, you're well ahead in terms of your overall, in terms of price growth, in terms of where you at last year versus this year. So CO3 continues to show a lot of growth, and a lot of that again is just due to the fact of where it's situated. If you are a young professional in the city of Toronto and you're looking for that entry-level luxury product, this is where you're looking, and a lot of people are looking there. And the reason why they're all looking here is that this area is so well situated and has a ton of brand new transit options moving there. It is going to be the new neighborhood in the city. It's going to be the neighborhood that everyone wants to live in, everyone desires, and everyone aspires to live in. When you look at Oakwood Village is going through a renaissance similar to what we saw on Queen West, or similar to what we've seen on Dundas West or Ossington, where it's really becoming a cool spot with a whole bunch of new restaurants and shops opening along this strip. Get in now. That's all I can say. Get in now before things really change and you're going to be regretting not considering this neighborhood a lot sooner. So after watching this segment, if you're interested in buying, selling, renting in any one of the under the radar neighborhoods, or really anywhere across the city of Toronto, definitely hit us up. Calendly link is down below in the description. Book a call with us. We're more than happy to help you be your real estate resource in the under the radar neighborhoods we talk about, or anywhere here in the city of Toronto. Don't be afraid to hit us up. And then remember to like and subscribe if you like the content that you just watched. Please share it with anyone else that you think might be interested. And as always, what we like to say at the end of every video, in real estate, as in life, the next big thing might just be where you least expect it. So stay positive, stay on the ball. Peace out.